We'll see you around the timeline. Feels good to be back.
I think that Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm Jesse from Base. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the Rollup.
top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the Rollup.
Zoom out. The institutions aren't coming. They're simply here. It's the golden age of crypto, guys. Get right. Let's go. Welcome to the nest.
See you on the show.
Yes, sir.
Wow. Here we are.
If Saylor sold, we were so back. If he didn't sell, it's all over.
Turns
He
out we
didn't
bought.
sell. He bought, and it's not over yet.
He bought and he
not over
raised
yet.
his cash holdings.
Yeah. I think I saw a tweet from Anson that was like, if he's just going to dilute MSTR shareholders and buy more Bitcoin until this thing goes up, then I think we should just forget about him.
I saw another tweet
He's-
from Tulip that says, Saylor non-accretively diluting MSTR holders today is probably your sign of how desperately he needs Bitcoin to go up. Expect the market to continue hunting him.
Wow. Wow. Well, ladies and gentlemen, you are watching The Rollup. Welcome to Tokenization Tower, the Nest, broadcasting live from the financial capital of the world. Today's June 8th. We have a great show ahead. Shout out to Plume. We're here at the Nest, powering their on-chain infrastructure asset management product, the Vault product that EtherFi deposited $100 million into last week, Rob, that we had them on. What a Monday. What a weekend as well.
Let's start there, Andy. How was your weekend?
It was great. I mean, the Knicks were on Friday. Huge win, 2-0.
Game 3 tonight.
Game 3 tonight. And then
We
very
got-
chill. Saturday was super chill. Just like took it easy. And then yesterday went to Soho House. It was a vibe. And here we are.
Game 3, we got Knicks in
Yeah.
full.
I mean, come
Sweep.
on. Come on. We got to get it. We got to take the Knicks. Come on.
Got
We're
to.
in New York.
Right? Come on. Come on.
Come on.
Great
How
show.
was your weekend, Rob?
Day topics. Yeah, weekend was good. Nice and chill. Played some golf. Enjoyed some sun. Weather's been beautiful down here. You know,
I bet it has.
I'm used to the Florida summers. They honestly don't bother me in the slightest. I like the warmth.
Yeah.
Especially
Yeah,
after
yeah.
being inside in the AC all day. So it was good. Good family weekend. Got some air. Got some sun. No complaints over here.
Nice. Today we got DeFiDad coming into the tower in about 20 minutes. Guys in the chat, we will see you. We will be vibing with you all day. Then we have Sam from Frax joining as well. So 2 in the tower. Robbie's coming up to the tower as of tomorrow. So that should be great. Have you up here for a couple days. As always, our topics of the day are powered by Trezor. Use code ROLLUP10 to get yourself a Trezor at trezor.io. Today, we're going to move into markets, weather, and opening segments. Rob, before we do, let me tell you actually about Frax, our premier stablecoin partner, open, stable, borderless, the future of digital money. Frax.com to learn more. As a beautiful day in New York, we got the window cracked. It's 73 degrees. It's a little sunny. It's a little windy. The Knicks are on. I mean, so just down here, you've got like barricades of police. Like I'm talking like a robo army, like full deployment vibes. Like they're all just standing there in like these massive groups, just like preparing for tonight. Like already, it's 1 p.m.
Well, Trump's going to the game.
Yeah, he is.
So enhanced
Yes.
security measures. That's all people.
TSA.
TSA like security measures. They told people to get there a couple hours ahead of time
They did.
because of the enhanced security. And I heard people were camping out in line in front of the stadium.
No way. No way.
That was the update. Beautiful day for it too. 73 degrees, 0 chance of rain, maybe a little. It says sunny. No complaints there. I'm flying in tomorrow. Should be a great week. ETHConf going on. Knicks in 4. World Cup starts on Thursday. What place would you rather be? I'll be there. Sponsored by
Stoked.
Relay.
As always, guy.
Get you wherever you need to go.
Relay.link. Use Relay.link for your cross-chain swaps. They are going to power your cross-chain swaps for our weather segment. As always, let's get into the markets. I know that's what you guys want to hear about. Let me tell you first about Denari, our on-chain tokenized U.S. equities partner, bringing real-world stocks on-chain. Explore on-chain access to public markets. Visit Denari.com. It's green. 2% on Bitcoin, 3% on ETH, 2% on Sol, 3% on Chainlink, 5% on Near. I think that might be a little low, actually.
It was looking pretty scary on Friday going into the weekend. Equities sold off pretty high. Everything sold off. Zcash got cut in half due to the hack that we heard. It literally cut in half, went all the way down to 300. And so now we're bouncing back a little bit. Zcash is up 450. I think it's up there. Bitcoin is looking decent. ETH is a big loser in this mix right here, and everything else holding up okay. I mean, Andy, we were talking, last week about the relative strength trade. These things started to unbundle and unwind a little bit.
They did.
And it looked like nothing was going to hold up in a Bitcoin bear market, but maybe Bitcoin isn't in as much of a bear market as we thought. Saylor's holding on for dear life. We didn't get into the 50s or lower as we had suspected we might. Not out of the woods yet, but things are looking a little bit more promising. Maybe just taking a bit more of a slower approach to forming this bottom.
Yeah. I mean, we'll see. It's a nice bounce. Definitely gives you some breathing room. Markets are, rebounding. It's nice to see that the leaders, Venice, Near, Hype, we'll go over Coinbase news today. Hype had a nice breakout. Zcash as well, getting that. Wow, that Zcash DAT is up 45% today.
Oh my goodness.
Wow.
Oh my goodness.
Holy.
Yeah, I didn't do much on Friday. Thursday, Friday, everything was down significantly. I didn't do a whole lot except I did buy a little bit of Hype under 60. I got in like 57, 58.
Sick.
So I'm
probably going to end up doing
what's that?
Being nice. Probably going to end up being a nice buy.
I think so. I mean, maybe we see those levels again, but I think I'm a buyer of Hype in the 50s.
I know.
Otherwise,
I wanted to get it at 50.
Yeah, I don't know if we get all the way down to 50, but anything in the 50s, I feel pretty good about. Otherwise, not a whole lot of position changes. Just kind of held on for dear life over the weekend. Things started to rebound a little bit, which is great to see. So, what about you?
James says,
what are you looking at over there?
Sailor's dunking on everyone. There's no second best. Yo, W. Robbie for behind the dip. Yeah, it was a nice dip buy. I'm honestly just hanging on per Hype and Bitcoin, hoping for Venice and Near to also have some strength, hold up a little bit here, and just seeing if this relative strength trade can come back, right? Like I think it was here, it's kind of gone away. Is it though? I don't know. We'll see. So that's kind of like how I'm thinking about it. Give me $50 Hype entry, make Hayes sell. Yeah, apparently there was rumors of him buying back, and he was just like, "Nah, I did not buy back."
Not do that.
Like, yeah.
So we've got to make him buy back higher.
As always, guys, our markets are powered by Zama. Use Zama.io for upcoming new portfolio products, as well as for all your private confidential transfers of stablecoins and other assets on Ethereum and EVM blockchains. Let's get into the news, guys. Before we do, let me tell you about Near, the blockchain designed for AI native applications and autonomous agents. Use Near.com for some of your best portfolio management in the world, as well as Near.ai for private inference. Subduing the world. Zcash update. Alrighty. Well, what's going on here, Rob?
So we knew that Zcash was going to launch a new pool. Guys, if you are curious about the Zcash situation, we had a great update from Mert on the show on Friday. And so this essentially tells the story of what happened. Obviously Shielded Labs had hired a white hat to go in, use the state-of-the-art AI tools, literally not even open to the public yet. These companies are now red teaming their software engineering employees, which means that they are essentially access to the frontier models before they're released to the public for like safety and testing purposes, which is great because then they can use them to tighten up their protocols before they would get into the hands of a malicious actor. And so here, we hear the story of, the Zotl protocol R&D, an issue had been discovered, and now we need to be read in. And so we knew that this was an issue with the Orchid pool. This was a vulnerability in Zcash. It was one of the most important, but also one of the most quickly resolved after it was found because of its significance. So we knew that there was going to be a new pool that's launched. That pool is called Ironwood. And
Ironwood.
yeah, Ironwood is also the name of the golf course up where I used to live. It's an absolute dog track. If we scroll down a little bit, we can read on.
Yeah. Please.
Well, we can. No, please. Please.
Because I'm just trying to understand. So they were able to come out and say, I think Josh put out that post. He was like, Ironwood is the next upgrade, and that is when we're going to find out about the potential infinite minted Zcash tokens. Is that correct?
That's right. Because the hard fork, by implementing this pool, it does trigger a hard fork, and ultimately the community is going to have to approve this hard fork and this new pool with governance. But what happens is there's an accounting method implemented into the protocol called turnstile accounting. And Mert was telling us a little bit about this. But what happens is everyone's going to be asked to migrate from the old Orchid pool to the new Ironwood pool. You would expect everyone that's alive and able to migrate their coins so that they're safe from the vulnerability. Anyone that's left in the Orchid pool is going to be, we're going to be able to tell that there's going to be some funds left, but it should be negligible. And everyone that moves to the new pool is going to be safe and sound and cozy in this new pool. So that's essentially what we have. If there are coins that move, we're going to be able to identify them. And so the theory is that this wasn't exploited. If it is exploited and it moves, we'll know. And if it never moves, then no harm, no foul. There's coins that are locked in this pool. They're never going to move. It doesn't matter, if a tree falls in the woods, no one's around to hear it. It doesn't even make a sound, right? So this turnstile accounting method is going to give us, without beyond a shadow of a doubt, whether the vulnerability was exploited by, moving these funds from the old pool to the new pool. And Josh kind of walks through, the methodology here and ultimately, what still has to happen in order for this Ironwood pool to go live.
Got it. Okay. So there was obviously these crazy tight timelines, these deployment risks. There was reorg concerns. People were worried about the integrity of the chain. Honestly, this seems like, I saw this tweet that was like, Zcash is the most interesting thing right now. It gives like early Bitcoin vibe, got hacked, so volatile, up a ton, down a ton, teams working on shipping patches, bug fixes. Our quant also made a note to tell me that he is nibbling some Zcash around these levels or lower, actually, and that our quant. He's fully prepared for Zcash to trade in the 100 to 200 range, but he is nibbling on Zcash here. So guys, take that for what it is. Let's get rolling into Dan Tapiro. He says 5 years from now, 99% of stablecoins will not be dollar-based. This is an incredibly interesting take.
Yeah, I come
from the markets world, traded currencies. That's what I did my whole life. I can pretty much guarantee that 5 years from now, 99% of stablecoins will not be dollar-based.
I'm so confused at this. This is such a peculiar take that he's anticipating within 5 years, the entire stablecoin market to be inverted. Right now, 99% of stablecoins are dollar-based, 1% are not, and he's calling this to reverse. So let's go ahead and play the video, and maybe there's some nuance here we can pick out.
So you talk about what's another area we're investing in, we're interested in. I come from the markets world, from trading currencies. That's what I did in my old life. And I can pretty much guarantee you, I bet you just about anything, that 5 years from now, 99% of stablecoins will not be dollar-based. You're going to have yen. You're going to have Indonesian rupiah, you're going to have euro, you're going to have all the currencies around the world will have their digital equivalent. We haven't even started that. And yet in the last 5 years, we've gone from 0 stablecoin trading volume to 33 trillion last year. So You talk about like what's another area we're investing in, we're interested in. I come from that the markets world.
I get it. Like I get the investment thesis here. Like I get it. These are, there's a lot of reasons why the rupiah or the rupee or the ruble would actually end up, becoming a stable coin and having this. But to say that the majority or more are going to be non-dollar based is just kind of a weird take.
Guys, and maybe Andy and I are missing something here. It seems so ridiculous. So please inform us if we're missing something. I just flat out disagree. I think the vast majority of stablecoins are going to be dollar based. I think maybe, as you said, some of these other currencies are going to gain some market share. But if you look at simply, I would anticipate that the stablecoin currency demographics is a reflection of the current currency for foreign exchange markets out there right now, in which the dollar does dominate, if I'm not mistaken.
James says, DTAP has that beautiful confluence of decades of experience while still on the bleeding edge. Global digitization of other currencies is huge, which I agree with. It's just it's the bigger than the dollar part that I'm kind of struggling to get over. All right, guys, let's get into Venice, because I think people are excited about this one. Did not underperform at all. It has completely done well. Before we do, let me tell you about Infinify, our DeFi partner on the show here, building DeFi infrastructure for simpler access to on-chain yield, liquidity, and capital allocation. Visit infinify.xyz to learn more. Guys, we've got Eric Voorhees here getting excited, getting bullish on Ansem and Banks' show, talking about V2 mines. And yeah, let's see what he says, because I think, look, Rob, Venice is trading at 17.5.
It is. It is held up extremely well.
It looks great. It touched 18.4. Let's hear what Eric has to say. Eric's so bullish, man, always. He's so bullish, man. He's so bullish. Go ahead and pause it there. Chat says it's muted, guys. Leo, we got it muted there. You just go ahead and you just can't hear the video. Just go ahead and pause it there, Leo. So Eric's basically telling us about thanks, guys. Eric's basically telling us about what's up, Clemente? Eric's basically telling us that they have this new ability in Venice to have multiple agentic capabilities, Rob, that are bringing together. I mean, kind of sounds like a swarm, but it sounds like all of these agentic firms and companies are focusing on, what you could say, the model and the model improvement. But Eric seems to think that there's a big improvement here on not the model improvement and just doing the actual improvement of getting these different models together. James says other countries need to defend their own currencies by creating their own, or all their citizens will auto exchange their money to dollars. They'd have to not allow that to default. Dollar remains king. We agree with that. What's going on, AGR? What's going on, Libran Crypto? Clemente, how you doing, man? Love your videos, dude. Honestly, one of your biggest fans. One of your biggest closet stealth fans over here. So keep fighting the good fight.
If you
Okay.
are a power user and you know how to
All right, so you guys should
put
be able to hear
these
the video now.
put modules of AI systems together in certain ways, you can actually
And
end up
so,
getting
yeah, I
results
mean,
that are better than any given model
Venice is
itself.
bullish.
I certainly think so.
And so we're building a
and
way for
Eric
our
is,
users to assemble these things
he's,
into what are called
done
minds.
something
You can think of them like
Crypto
agents. You
before
can think
on
of them
the
like
Shapeshift, was
characters that are
super
more
early to the
advanced.
entire decentralized exchange game.
But
Now
it's
he's here
been
with,
something we've been working on
Venice.
in the background, and it's
I think he's on
getting
something.
closer
I
and
know. I
closer
think
to
he
something
knows
we
what he's
can
doing. He knows how to
release.
build a
But I'm very
product in a
excited about it because
decentralized way.
it creates this sort of
We've done so with
emergent,
Venice.
these emergent properties of AI resources.
And yeah, I think what he's doing now, because
And it's one of those things that like all the labs are
frontier
focused on their
model
model,
level, he's able
their
to
score
work
on the
on
model.
coordination engines for models.
But if
which
you actually just
is
combine
much-
these things in creative, interesting ways, you get
there's
stuff that
ad-
no
you don't
model can
hear
do
as
on
much
its own.
about this, but
So,
this is like
I know
one
that's a bit
level
of a vague answer,
abstraction
but
above the
that's
models
something I'm excited
themselves.
about.
You can almost
That's
imagine-
alpha though.
We
That's
have
sick.
We had
we
a
have
whole
an agentic
interop
chat
game,
in Venice now,
right?
which
Well,
is
there's
sort of the
kinda
first
like, the
primordial
canonical
version of this.
bridges, and then you have
so when you
these,
ask it a question,
interop
it's doing all
protocols.
sorts of things in the
And
background that a
Venice
normal
is almost
model
like
wouldn't
building
do.
this interop protocol,
And
while
yeah,
maintaining
it's
some very,
been
very
cool
important
to
features
just
like privacy,
be building this.
around these frontier models. And I think Eric has the ability and the opportunity to do something special. Like he's kind of pointing at what you can do when you're working with multiple models. And so if you're working on a foundational model, you can obviously try to push that as far ahead as possible, but you may not get the ability to work on certain use cases unless you combine multiple models. And that's a fundamentally different proposition that he's bringing to the table. So I think this is very cool. I think that we don't hear a lot about this in the current market. And I think Eric is a terrific founder, generational talent. He's the guy to do this.
Yeah. I mean, he's got it. So, and OG Killer says 3,000 hype strong. Yeah, man. I mean, dude, Per looks great. Hype looks great right now. They just announced this Coinbase thing. Like, let's get to this, right? I mean, come on. Let's keep it rolling here. I think we had a couple more things, but man, we got to get to this hype thing. This is the news of the day, right? Is it not? I mean, so let's look at Brian's take here as well. More AI stuff. Honestly, like I can't wrap my head around this stuff right now. Pull it up, but like I don't have much for you guys here.
Well, Brian,
demand for intelligence is near infinite. 80% of workloads will be running on 90% cheaper models within 12 to 18 months.
Yeah,
I don't know. All this is just bullish for Venice. I need to get to 10K hype. Yeah, I know. Same, man.
Look, I think what Brian is suggesting here is, and I read this in the Citrini article this morning, where we kind of moved from this paradigm of token maxing to token panic. And so there was, people like, we had a wave of AI layoffs. You saw Cash App and Block. You saw Microsoft. You saw Coinbase. These guys laid off, a significant portion of their workforce. This is during the token maxing era, which lasted about 3 weeks. And then you had the realization that, wait, we're spending so much on AI tokens. Andy, we got to get you a drum set so you can hit it yourself. There you go. And so we had AI tokens. All of a sudden, there was founders that they were like, hey, turns out these AI tokens cost money too. And so they said, hey, there was one company that accidentally spent $500 million in tokens. Uber came out, and it turned out they had spent their entire 2026 budget in the first quarter on tokens. And so teams were totally taken aback and caught off guard as far as how much they were spending on AI tokens, because they encouraged their workers to use these tools, thinking that they were going to make them more productive, didn't really realize how much it costs for this token production. So that was the end of the token maxing era. And now we're in this token panic era.
Token panic era.
And so now that, these model companies are monetizing, we're starting to see the consumers, right? These guys that are consuming tokens kind of draw back a little bit. And what Brian is suggesting here is that we're going to start moving a lot of the consumption from the expensive cloud models like Anthropic, Claude, OpenAI to either open source models or smaller mini models. And so you see, the second one, 80% of workloads will be running on 99% cheaper models within 12 to 18 months. And if you're looking at the Chinese, DeepSeek V4, these things are 10x cheaper. And the incremental loss in ability is like not that much. So you can get way more affordable models and not lose a lot of intelligence.
Yeah, that's what I'm using on Venice.
And that's
dude, honestly,
yeah. And so Venice
Rob,
and
have you
Open
used
Router
Venice?
are routing consumption more through these open source models.
Dude, but have you used Venice, Rob?
I've
Dude,
not.
if you've never used Venice, I think you're gonna say no.
I have not used the product, but I've chosen.
I think you need
buy the
to
token.
buy a subscription, $20 a month, and go and enjoy a private, uncensored AI experience and come back tomorrow. Because it's
what
unreal.
I like about
It's unreal.
now, correct me if I'm wrong here, but Venice is private, uncensored, great. I have two things actually, because right now I'm mostly using ChatGPT, right? I like that it knows, like it's building a context window on my life.
Correct. You cannot do that with Venice.
So like I'm going to go to Peru in a couple weeks, right? I'm planning this trip and I'm loading my entire itinerary into there for one chat. And then I come back to it, a week later and I'm like, hey, I want to do this. There's this thing going on. Tell me more about it. How can I do it? What's the best way to experience it? And it's like, oh, well, I know your dates. I know when you're going to be there. You're going to get there on this day. You should do this.
Yeah. Yeah.
And it
no,
has
I feel you on
memory
that.
and it
I
builds
just mean
context.
I just mean when you go in there and you talk to the Venice, like whatever LLM, it is liberating because you're like, wow, like I know that this is not going to some San Francisco data factory that is like, going to be like I'm not gonna like this prompt is not going to be used against me in court.
That is,
This prompt is not going to come up in a prosecutor's file against me in court. You know what I mean?
I do
I'm not
enjoy
saying I'm
that.
doing anything wrong, but
I'm trying my best to avoid getting taken to court anyway. But in the case that it happens, it's reassuring to know that they couldn't use my chat history against me. The other thing that I think I like about Venice, but again, I haven't used it, and I'm probably gonna get clowned for not using Venice. I did just buy the token as we were on the stream. It looks great, so shout out Eric. But
Rob just bought Venice on the stream. Guys, I can't lie. I'm looking at this Hyperliquid dip and I'm like, oh God, I gotta get more.
So Andy, because you've used Venice, you would know better than I would. The other benefit to it is that it routes your model or it routes your query across several different models, right? So does it not aggregate and almost like Open Router, like I can hit Venice's LLM and then Venice is going to say to itself, hey, I should put this into Claude or it's
you can just pick. You can just pick the model that you want to use.
It doesn't pick.
Yeah, so there's like a set of anonymous models you can use and then a set of private models that you can use. They're all uncensorable. The anonymous ones means that your data, your prompt inputs and outputs are still going to be saved to the model provider's cloud. So Anthropic will know if you're using Claude and anonymous, but they'll never know that it's you. Venice obfuscates your identity. If you do private, it's not only effectively is it anonymous in that sense, in that Venice has no idea that, like Venice has no insight into the prompt, into what you're using, but also the data and the prompt back and forth is not given back to the model provider to be saved in their cloud. So that's kind of like the two modes they have. But I want to move off of AI. I want to get back into crypto. Let's get into strategy. Before we do, guys, I have to tell you about our infrastructure for cross-chain swaps partner, DeFi. Building infrastructure for cross-chain swaps, routing across the on-chain economy. To explore smoother cross-chain execution, visit Lee.fi. Rob just bought more Venice. VV is a beast. Is now time to 20x a hype buy. Okay.
All right, let's quickly.
I'm not doing that. Long
no
H100 GPU compute 1 year contract rental rate. Okay. Interesting. I said, how do you get exposure to that? And Josh Britt says you can trade that on Lighter. So you're longing the rental price of GPU compute of an NVIDIA computer. You're longing that.
I think there's also a market for that on the guy that used to be at FTX, Brett Harrison. He's got it's called Architect, right? He's trying to go deep into these compute markets. That one could be underrated for a little points farming for anyone who's interested.
Yeah.
So we've got on the show here strategy. Yeah, go ahead.
Yeah, so Rob, I tweeted, I was like, if Saylor, so this is the market that we're in. If Saylor sells, we're so back. If Saylor doesn't sell, where it's all over, wow, what a great market. Like, fantastic. So we come to find out today that our guy has certainly not sold. In fact, he's bought and tops up his USD reserve by 100 million. This is like giving me David Shamus hyperliquid strategies vibes right here. So good job, Saylor here, I would say. And it kind of seems like his whole shenanigans have kind of slowed down. Not into like a nothing burger, but you know, I would say I think the situation with Saylor has calmed down. Is what I would say.
Obviously what he did sell 32 Bitcoin to try to like signal to the market that he was willing to do this. The reason that he needed to do that is to reassure the buyers of Stretch that he could pay the dividend. So if we're checking Stretch today, TRC is 96.5. So it's not totally
it's down a bit.
It is down a bit. It's up from where it was yesterday. I mean, it got all the way down to 90.
Does anyone hold Stretch in the chat? Like, has anybody had any experience trading that thing or holding it or doing anything with it? Like, have you gotten the yield, the dividend? Let us know if anyone has ever used it. I'm super curious.
They also voted to pay this dividend twice per month. I think that came out today. And so, you know, that should, again, help to reassure market participants, buyers of Stretch, that they are going to get this dividend. It's going to stay at peg. But the market isn't, you know, pricing it at peg right now. It's at a bit of a discount.
Still at 96, right?
Yeah. So they raised their cash holdings to $1 billion. But I think they have something like $3 billion in annual, or maybe $1.5 billion in annual dividends that they have to pay.
Yeah.
So they're going to need a lot more cash on hand. And
well, that was why everyone was hoping that he had sold to have raised that cash to like.
Well, it turns out he did raise cash.
Like a 2-year runway.
He did raise cash, but the way he raised the cash was he sold MicroStrategy shares, and people are now saying, well, he himself,
he's just going to keep diluting the shareholders.
He himself said that he wasn't going to sell MicroStrategy shares when the MNAV was under 1.2. And turns out it was pretty much under at 1.2 when he sold these shares. He raised the cash. That reassured Stretch, but he diluted Bitcoin per share. And so he's really playing with fire right here. He needs Bitcoin to go back up so that the MNAV gets fixed and so that he can sell more shares and raise his cash position to buy more Bitcoin and to pay the dividends. If Bitcoin goes, I mean, if Bitcoin goes down or Stretch doesn't really get repegged, there's going to be a very, very sticky situation where he either needs to sell Bitcoin in a down Bitcoin market or he needs to sell more MicroStrategy shares under the 1.2 MNAV, which is going to dilute.
Which you don't want to do. You do not want to do.
Stockholders even more. So he's in a very precarious situation. Saylor needs Bitcoin to go up. If it doesn't, we're going to get, you know, you kind of mentioned, right? He's either going to sell Bitcoin and Stretch is going to get repegged and everything's going to be fine, or he's going to buy Bitcoin and he's going to buy Bitcoin and everything's going to be fine. That works right now. But if the MNAV gets too low or if Stretch gets too low, he ends up in a sticky situation where he either buys Bitcoin, but it's not good, or he sells Bitcoin and it's not good. And so we're really in a sticky situation for Saylor right now.
Let's actually get into the next one.
Right. So this is the counter argument.
This is the counter argument, guys, because if you're bullish, Flood here, I think he bought a ton of Bitcoin at around the 60K level. I think he bought a ton of Stretch as well. And so he says, STRC repeg, BTC bottom shorters trapped, rush of liquidity from equities into Bitcoin, summer 26.
And so part of Flood's thesis, I don't know if he bought Stretch, but he did buy.
He did.
Okay, so there you go. So he bought.
Or at least he said he did.
He bought Stretch. He bought Bitcoin. Again, at least that's what he said he did. And then part of the Bitcoin thesis is that you have early Anthropic, OpenAI, and SpaceX investors that are set for a massive liquidity event over the summer as these IPOs go live. These guys are going to get unlocks of billions and billions of dollars. They're going to dump their SpaceX, Anthropic, and OpenAI shares on the market. Maybe there's going to be retail investors and post-IPO investors that are going to pick up those shares. But regardless, these early investors that are getting these liquidity events are going to need some place in order to put their capital. And part of the thesis is that they're going to go into Bitcoin because they're technology investors. They're not going to go into this, really over heavy stock market. They're going to look to get into something that has relatively underperformed, which is Bitcoin.
And can still, hasn't pumped yet.
And can still express this alternative technology futuristic view.
Yeah. When you're in crypto and it's a bull and you're just kind of like, wow, what hasn't pumped yet? What is left to buy? I feel like that's the situation going to be happening at macro scale. It's just like, all right, what's left to buy in this market? Okay, it's good. It's Bitcoin.
Gold
as a large
gold
holder.
Pumped, copper pumped, commodities pumped, oil pumped, stocks and equities are going live. Equities are, basically flying, but the IPOs are shaking things up. They had a rough day on Friday, but Trump said that Netanyahu's going to have to listen to him. War shenanigans are happening, but equities are doing well. They erased all those losses, and so what else hasn't outperformed? It's been these tokens.
Yeah. How about the South Korean index?
Yeah, circuit breakers. Yeah. Before we get to that, this is another developing story.
Oh gosh.
Let's get it up on the show. We're not going to spend too much time on this, but you have to call it out. I mean, you have Eric Voorhees and Venice just doing an incredible job on the entire AI front. It's almost like Eric Voorhees won the game, moved on, playing another level, whereas SBF lost and had to restart. The game.
In jail.
He rage quit, got thrown in jail, and now he's trying to get back to a new game. Trump had said that he's not going to pardon SBF. I don't know. I mean, you could probably check the poly market on this one, but I don't see it happening. What do you?
Josh says he was short STRC at 99.97, looking to long low 90s, had a long at 92, closed it at 95, looking to relocate next Bitcoin dip. Crazy.
Guys, SBF released from custody in 2026 has a 7% chance on poly market.
No way.
7%. And it's hardly moved. It moved from 5% to 7% today. So people,
dude, we're gonna pull up Poly Market and we're gonna pull up the Hyperliquid ecosystem page and we're gonna do some fun screen sharing and we're gonna show you guys what we're looking at from the Clarity Act to the markets to the NBA Finals to Hyperliquid stats. What we're buying. Before we do, we're going to get into our daily equity segment. Again, this is our equities focused, our stock market focused segment of the show, powered by our friends at Denari. So we're going to pull that up here in just a moment and go through the dumping South Korean stock index because it is down bad. I don't know if any of you guys have been, playing around in the Korean equities market. I know I've seen people get excited about. I actually had the guy from Solana in here. What's his name?
While you think of his name, let's play the animation. We're going to open up the next segment, Daily Equity powered by Denari. Going to get into it.
Alrighty, guys. The Kospi shock is a warning about crowded AI trades. South Korea's Kospi index reportedly fell 8.4% at the open on June 8th, triggering a circuit breaker halt. Sharp unwind of crowded AI and semiconductor trades. Guys, I must tell you, I was at the bar on Friday watching the Knicks game, and I was talking to a dude that played lacrosse at Dartmouth and now works at Blackstone, and he said the majority of his equities portfolio is in 3x levered semiconductor ETFs. And I looked at him and I said, it's time to get the hell out of there, buddy. So this is happening. SK Hynix, Samsung just
Where are the sound
smashed. South Korea is not trading like a broad neutral equity market right now. It's trading like it's heavily tied to memory chips. Let's give some sadness to South Korea, Alex. Hit something on there. Anything works. There you go.
There it is.
So
yeah, they triggered the circuit breaker. People were very excited
Koru
about
got
this.
massacred.
There's still a lot of attention. I was reading the Citrini article today. They're talking about AI at the edge. There's still a massive demand for memory. But we saw the equity unwind in the US on Friday. That got reversed due to the war, but the Korean stock market is kind of playing a little bit into some of the fears that we had seen on Friday.
Oh God.
So this is what
Not me buying more hype.
What's going on?
Not me buying more hype on the daily equity segment. Guys, I mean, look, just to kind of close this one out, when these crowded trades unwind, concentrated markets tend to break. South Korea's sell-off is kind of like a warning, I think, to the global macro about the AI enthusiasm has been one of the most important macro positioning trades. But of course, you know, as with anything, these things can unwind quickly. That's our daily equity segment, powered by our friends at Denari. Let's give them some love, Alex. Great team there at Denari. Thank you for being a part of the daily equity segment today, guys. Let's get into screen share. I got the Hyperliquid dashboard up for you guys and Polymarket, Rob. We got quite a few things to go over. So
let's see it.
TWAPs, we're on. Ladies and gentlemen, if you've been following the TWAPs, we are on. I mean, we are absolutely on. It is a beautiful day to be watching the Hyperliquid trade happen. It's up only. It's been looking good. It is 5 mil of the next 24 hours. ETF flows have definitely declined, but it looks like we got about 25 mil today so far. But we got outflows on Friday. 3 mil. First day of outflows for the Hyperliquid ETFs. But net flows, obviously very bullish, right?
Very bullish indeed.
So I think part of our thesis, Rob, is just this HIP3.
Of course.
And it had quite the pullback.
Yeah, so what happened here?
I don't know. I think this was just on the deleveraging. Like, imagine people, this is open interest. So I think people, imagine, you know, you have these long crypto trades on and then the market dumps. And so you probably just take some of your AI or your stock trades and move them. But overall, it still looks good. Arban Jensen is pumping Korean stocks. It'll be fine. Korud is mad. Man, I'm up nicely, though. I'm in at 340, so I am good. Nice, Ojikilla. I don't even know what Koru is, man. And I also don't even know how you can trade these Korean things. I don't think they're available on Hyperliquid.
We don't have Korean stocks on Hyperliquid?
I don't believe so.
How's the SpaceX
I'm trying to
IPO
look right now. Good question. Good question. How is that looking?
Okay, so what's our Hyperliquid thesis here? Because, yeah, SpaceX looks rough. You know, obviously, we're going to have more IPOs. Damn. SpaceX is just the first in IPO season. We're going to get OpenAI. We're going to get Anthropic, right? These are going to come shortly after SpaceX. So we're going to get more markets that are going to list on Hyperliquid, and we're going to see more happen as a result of these pre-IPO markets. However, we saw Bitcoin crash. These things are kind of starting to pick back up a little bit, but it feels like it could be a bear market rally. Our quant is nibbling.
On Zcash.
On Zcash. These things
Koru is
still
3x
feel correlated. Even though there is some relative strength, it feels like these aren't negatively correlated.
Yeah.
So
Edith Edwards says lit is better, Rob. I honestly, man, do you hold any lighter, Rob?
Tiny bit, maybe 2% of my portfolio.
Okay. Dude, it actually looks great. Like, it looks stronger than hype, probably. I don't know. It's hard to say. The problem with lighter right now, guys, is like, yes, I think it's a great product. It's a great thing. It's like, we have Vlad in the studio on Wednesday, actually, where we're doing a full podcast with him. But like, it's still in, like, it doesn't take much to fully put it right back into like a sideways or a downward movement where, not that hype's pumped more and so it can pump more, but it's like, yeah, it's kind of just like, it doesn't take much to put it back down into the low ones. And then it's kind of like, you're in a tough spot. Whereas even hype at 45, you're kind of like, well, this is fine because it was at 20, you know, a while ago. And so I guess you can make the same argument for hype, or for lit, but
let's try to look at the fundamentals here. So I read the Citrini article. Hyperliquid is the non-custodial antidote of FTX's failure. Founded after the collapse of FTX, Hyperliquid delivered the first competitive decentralized perpetuals exchange that could compete against centralized platforms. In doing so, Hyperliquid dug into the roots of blockchain technology, launching their own layer 1 protocol to optimize for speed and low slippage. They've now gained material market share, and they have a chart here that shows as of May 31st, Hyperliquid is number 4 if you combine centralized and decentralized perpetuals exchanges, Binance owns about 53% market share in this.
Are you a Citrini subscriber?
I am.
Is this a paid post?
It is.
Damn, is it messed up to like screen share as paid posts, or is that cool?
I don't want to get copyrighted, but
Yeah, I feel you.
should we do it anyway?
I think we should at least like pull it up for our audience. Like, no one's gonna pay $1,000 a year for Citrini. I mean, you are. So I mean, not like the whole thing, but like just give us like show us something.
Okay,
you know?
all right.
Show the guys, right?
Yeah,
Like, come on. You guys want to see Citrini's post? We got DeFiDad in the house. He's gonna come on in a few. Let's have a look at Citrini. I mean,
Let's do it. Let's do it.
I think it's fine.
So
just at least just the Hyperliquid section.
Yeah, of course. So are we up? Let's switch it over.
Yeah,
We're gonna switch
I still got Hyperliquid dashboard. Just real quick, guys. Looking at Per and Hyperliquid strategies, they still look very strong. They're outperforming Hyperliquid by a good fair margin, as you guys can see, very consistently. And
Are you still all
they
in?
still got the 141 million.
Still all in after the uranium rotation?
Dude, oh my gosh. I checked uranium. Oh my gosh. Smashed. Like, it's up 2.5% today, but it completely got wrecked. Like, if I had held and stayed in, I basically have a differential of 25 to 30% on where I'm currently at with Per, or 35% even compared to where I sold uranium. So not only is uranium down, but Per is also up a ton. All right, guys, we're gonna get Citrini's article up. And Rob, you were saying that he had a bullish Hyperliquid piece here. Let's walk through it. Let's not piss him off. And promise I'm not gonna do this a lot, Citrini, but wanted to show the audience what you put. And you know,
guys,
if anything,
Citrini has
go sign up.
an incredible Substack. It is paid. Go subscribe. He does a great job. Obviously, he sent someone to the Strait of Hormuz. He gained a lot of popularity here. And obviously, he's underwriting Hyperliquid as part of this. Now, the initial piece of Hyperliquid's portion in this article, and this general article, is his themes that are happening in 2026. He did the same thing in 2025. He talks a lot about AI and how that is progressing through the market. And he has great. I mean, he makes calls on indices. He does an incredible job in this. And so he is underwriting Hyperliquid as one of his new ideas, a potential new theme underway in 2026. The first part of this Hyperliquid piece is mostly an educational piece about perps. And so he kind of walks through, you know, the difficulty of underwriting crypto as a whole is because it really lacks fundamentals. He says sometimes we've wondered maybe that's the point of crypto.
He's one of us. He's one of us. He's one of us.
He's also saying AI is going to magnify this lack of fundamentals. And that's evidenced by Zcash getting cut in half as a result of that bug. And so one of the main value propositions of crypto as a whole has been permissionless transactions instead of a centralized entity like the DTCC unilaterally controlling who owns what and clearing every trade. A distributed ledger would transparently record who traded what, when, and at what price. The blockchain is governed by everyone, owned by no one, which is great. And he also describes kind of that Hyperliquid is the antidote to FTX's downfall.
I like that. I like that framing a lot.
There's no centralized, point of control like there was at FTX. And he goes on to describe how, with settlement being permissionless, virtually any claim, asset, or meme could be wrapped in a token and traded. He talks about perps as a whole. He describes perps kind of from their origination by Robert Schiller, which is an incredible name in this industry. He originally pioneered perps, describing them pretty much as a regular futures contract, but they don't have an expiration date. Talks through how funding helps keep perps, helps keep perpetual futures tied to their underlying, despite not taking custody, not having an expiration date, and not having an underlying spot price. This is how you have things like the pre-IPO market still functioning. And he talks through these funding rates, and then he talks about how centralized crypto exchanges have dominated perp trading to date. Ironically enough, perps were a big draw for traders to transact on FTX, but obviously FTX was centralized, and how FTX had one central, control. Hyperliquid does not. And so here's really the chart that I think is most relevant here, and it talks about how Binance is currently dominating perps volume, even though all we hear about is Hyperliquid. Binance has still got the lion amount of market share at 53% as of the end of last month. Hyperliquid comes in at just under 10% of perps market share. But the trend is shifting, right? More market share is going from Binance to Hyperliquid than the other way around. So Binance is losing market share. Hyperliquid is gaining market share, encroaching on territory occupied by centralized rivals like Binance, Bybit, OKX, and Coinbase. They clear roughly $40 to $50 billion a week in volume. It's notably lower than some of their SEX competitors, although the growth trajectory is apparent. Decentralized exchange volume captured nearly a quarter of perpetual futures volume in December 25, occupies roughly 2/3 of all on-chain perp volume. Hyperliquid is on the rise, also occupies sort of this back end for front ends like Trade XYZ. Unlike FTX or other centralized exchanges, there is no centralized point of failure. Hyperliquid self-custody their own assets, trade on fully on-chain order books, are subject to the liquidity provided by HLP. Each walks through how HLP works, how it's essentially this community-driven liquidity provider that takes the other side of the trades on Hyperliquid, runs automated market maker strategies. The success of HLP Vault is notable given the lack of institutional capital, reinforcing the raise. Competing centralized exchanges like Coinbase and Binance have raised over $500 million to $2 billion respectively. Hyperliquid has raised nothing. They've been entirely able to bootstrap HLP on their own. As a reward to these liquidity providers, Hyperliquid airdropped almost 310 million Hype tokens in November of 2024 in that Genesis airdrop. So it's really incentivizing the community. And then here, Hype is the native token to Hyperliquid's Layer 1 blockchain, functioning as both an exchange and a network token. One can think of Hype as an equity interest in the Hyperliquid DEX, which the fees thrown off to the HLP being treated as cash flow of the business. So it positions cash flow to HLP. Hyperliquid is the network token of the Hyperliquid blockchain. This is what makes Hype compelling. Unlike the mimetic majority of crypto, Bitcoin included, where they have these fugazi sort of value accretive mechanisms, right? You have more value on the network is going to be worth something. And so, the network token has to be worth something, right? Hyperliquid doesn't, have this, this mimetic property. It has, real cash flows, real interest, real activity, generates real legitimate cash flow. On top of that, there's a buyback mechanism, which is orchestrated by the assistance fund. Over 90% of the fees generated by the platform are redirected into the assistance fund, which are then systematically used to purchase Hype on the open market, and repurchases are built into the fabric of the Hyperliquid protocol. Since its launch in January 25, cumulative purchases have surpassed $2 billion. By some measures, Hyperliquid repurchases have accounted for nearly half of all token buyback activity across the crypto market in 2025. They literally sparked this entire buyback meta in the digital asset industry. If you're measuring against total market cap, the Hype buyback clocks in at roughly 7% annually of its tokens market cap, which is an incredible ratio. This is the really, important part that I think people tend to miss when they're thinking about the buyback mechanism. The Hyperliquid Foundation brought forth a validator vote that would officially burn $1 billion in Hype tokens held in the assistance fund. If you project that going forward, the assumption is that looking forward, all Hype tokens held in the assistance fund will be viewed as burned. That's huge, because it means that all of the tokens in the assistance fund, which is, I think, upwards of $2 billion worth of tokens, almost 7% of the tokens, would be burned. That is a meaningful amount of tokens. And if you decrease that from the supply, obviously that is going to have an impact on the price. Talks about the Hyperliquid ETFs as of late, and RWA tokenization endorsed by Hyperliquid HIP-3. We're seeing more and more of the volume on Hyperliquid be part of these HIP-3 markets. This is also the liquidity backend for things like Trade XYZ, Ondo. I mean, we're going to see a lot more of adoption for HIP-3 markets. Andy and I believe on this show, we've talked about it. The thesis is that HIP-3 markets are going to end up gaining more market share and ultimately overtake the crypto native tokens. And we're going to see that. We're seeing that in the pre-IPO markets. And then, it says aggregate HIP-3 open interest has soared past $3 billion. second Hyperliquid Improvement Protocol, HIP-4, introduced in May, is going to add prediction markets. And this has some unique advantages over traditional prediction markets. So guys, that is what we have here as part of our Hyperliquid thesis. Citrini, again, shout out. Citrini does an incredible job. Very, very thoughtful research, ties together several disruptive, innovative categories, and talked about the trends that are important to watch in 2026. Guys, if you have the means, go give them a subscription on Substack. Very, very quality, thoughtful research. Don't go anywhere. We've got Ethereum bull DeFiDad, one of the guys that I looked up to when we started DeFi Slate way back in the day, and the Rollup in the studio in the tokenization tower. Guys, don't go anywhere. Keep watching. We've got an incredible show. We're going to keep things rolling, and we're going to get into DeFiDad, the host of the Edge podcast, right after this. Let's hit a quick standby. Guys, don't go anywhere. We're going to be bringing you exactly what you like right here, right now.
Money, power, and money, power, and we get deep, you know we get deep, you know we get deep, we get deep, you know we get deep, we get deep, we get deep, we get deep, you know we get deep. We get deep, you know we get deep.
Alrighty, guys. We are here with DeFiDad in the studio, guys. Robbie just texted me. I know you guys, if you guys are watching there, he just texted me to be bullish for the sake of his ETH bags. So, Robbie, if you're watching this or other ETH bulls, we got the right guy. DeFiDad's in the house. Great to have you, sir.
Yeah, thanks for having me, Andy.
Welcome.
Great to see you.
Welcome to New York again. I know you've been very busy doing dad things, as you are. A lot of little leagues, so it's good to have you in the city.
Yeah. I think I was joking with you guys yesterday, but I was like running between 3 different little league games and like gymnastics and lacrosse with the kids. So, but I came into New York for at least a day, so it's been great. I went to the ETH conference, and I've been just trying to catch some talks, and obviously get the pleasure of getting to hang out with you. For a
I'm
bit.
stoked, man.
So yeah,
I'm stoked. So I was just telling you before we hopped on, Edward from the chat. What's up, Rocky? Good to see you here. He says would love for you to compare Lighter and Hyperliquid a bit more. Feel like there's some alpha in Lighter with its regulatory setup. It has stronger buybacks in terms of its total buybacks per on like a market cap kind of weighted basis. Way smaller valuation, but Hyperliquid's kind of hit this point of no return in terms of global macro, in terms of mainstream awareness. Lighter has not quite got there. Seemingly kind of like this 1-2 punch right now.
Yeah.
How do you think about the Hyperliquid and Lighter as products and as investments in the current space?
Yeah. So the advantage for me with Lighter, and keep in mind, I'm a positive sum bull here. I'm very bullish on Hyperliquid. I'm very bullish on Lighter. As much as I think everyone wants to get excited about a smaller market cap, you have to remember that the best part about Lighter is that you have an escape hatch to Ethereum. So, we have, in my opinion, I think you have this, this greater security guarantee. Whereas there's the argument that Hyperliquid, if you listen to the Hyperliquid bulls, that it's decentralized enough. I think, again, if you were to compare the two, I think like one, again, provides for that guarantee to get back to Ethereum L1, which is Lighter, which to me is huge. Like, most important thing is that I can retrieve my assets.
Yeah.
Whereas with Hyperliquid, there's some give and take there. In terms of the market caps, though, I mean, it's as simple as this. Like, I know everybody wants to bet on the smaller market caps, and they want to say that they want to look at the two and say, if this one can one day be valued the same way this one is, it'll be worth that. And so then they look at the market caps and they do the multiple. The one thing you want to pay attention to is if you use something like DeFi Llama AI, you can ask it to spit out like, what's the last 30 days in terms of fees on both platforms. Nomadic and I were just looking at this recently. We were kind of hoping that there would be a more like obvious difference. That it was like, oh my gosh, like Lighter is clearly undervalued. And I do want to just point out, I think it was like Hyperliquid is just doing that much more in terms of fees. It was like 20 or 30x the day we were looking at it. Yeah. So, again, like huge opportunity in something that is probably sitting at 1.5 billion, I think, as a fully diluted valuation. I think there's probably some mispricing there, though, to like that having that guarantee to get back to Ethereum.
I think that's an unknown thing about Lighter. Like, I think I don't think people are really that aware of the security trade-off between the two.
And by the way, I don't mean that as like a knock on Hyperliquid.
No, but it's just unreal. You've been in this space for a while, right? Like,
it's like like for example, most of us probably never worried about the shared pool model with a money market like Aave.
Right.
Many folks didn't consider like what risk was there, but then when you have an incident like what happened, suddenly you go, oh boy, now I understand what worst case scenario can happen. So again, I'm like, fingers crossed. I hope Hyperliquid just continues to grow and doesn't experience any sort of setback. Yeah. But my concern is always like, what if? What if something bad goes wrong? Yeah,
and I mean, we've seen it in DeFi. We've seen these exploits or these events, and you don't like. There's a saying, you don't care, or decentralization doesn't matter until it does.
Yes.
Right? And like that is very real. Does the market seem to care at this point? Like, we kind of had this whole market structure shift away from kind of this DAO governance, decentralization theater, almost, you could say, a veil of decentralization. I think Kane from Synthetics has notably said that on our show a few times. And, it upsets a lot of people, but the market is clearly like valuing, these types of things on product, on quality, on revenues, on buybacks more than like, oh, how many nodes do you have? Hyperliquid is 24 nodes. You know, is that a blockchain or is that like a database? You know, Canton is trading $6 billion. No one really knows, right?
They all have their pros and cons. So like I think we want more rigid valuation frameworks, and like that's just clearly not how the world works.
No.
You know, the ultimate scoreboard is price, and so any token that sees its token go up over time is doing pretty damn well. And you know, as much as you know, I still am I'm probably like 60-70% ETH on any given day, and maybe like 20% to 25% Bitcoin, and then another like 10% of a mashup. I am finally holding some hype too. I mean, I like.
And is that just your crypto portfolio?
Just my crypto portfolio.
Okay.
Yes. Yeah.
So what does the DeFiDad portfolio look like? Is it like you got some real estate, some stocks, crypto, alternative investments?
I'm a pretty simple person. I mean, we have a family and we own a home, thankfully. And then I am still, I think Nomadic was posting about this recently. Just, I am still very long crypto, irresponsibly long crypto. I actually am very comfortable too in this setting. Like to me, this is your normal 4-year cycle to get beyond this whole thing playing out where we have to draw down, you know, not just 50%, but like I think on average like 70 to 90% across different assets. But I think the big difference is today. So like maybe going to like more of like my ETH bull thesis. And I remain extremely bullish on Bitcoin as well. And I mentioned Hyperliquid and so forth. But in terms of Ethereum continues to be the most reliable and secure network for DeFi. There's other networks that clearly host their own DeFi ecosystems. I think that'll continue to play out. But Ethereum has clearly had, you know, real network effects play out in its favor. The thing that's happening right now, and we just did an interview with Robert Leshner, which I'm hoping we get out in the next day or two out of editing. We were talking about all they're doing with Superstate, and obviously his focus is on tokenizing real world assets and then bringing them on chain. And I think, you know, Robert is very dependent on Ethereum. I think like more than 3/4 of all their liquidity is on Ethereum, but they are on other chains as well. The asset issuers need to be confident that nothing will ever happen to the assets they are issuing on these networks. And the track record is a 10-year track record for Ethereum. And so anyways, as all this is playing out, the more important story to me is that you, me, Robbie, Nomadic, all of us have lived through this era where it's always Bitcoin is number one. Ethereum has been number two. Solana's had a hell of a last few years. Hyperliquid is now, I mean, Hyperliquid is clearly a top 10. I think what's changing is we don't need to see all of the liquidity in like tokenized Bitcoin and just ETH and just like Sol and Hype. We're going to see real world assets finally eclipse all of this.
Yeah, on chain, right?
And I think
like
it's
the
hard,
top 10.
Right. It's hard for us to accept because to be fair, like we're long these assets, so we want them to go up. But no one ever said that we needed to bring trillions on chain and that, you know, my ETH doesn't need to be worth trillions to host trillions on day one.
Right.
That said, I do believe that if we can bring on, you know, trillions, tens of trillions, clearly over time that network becomes more and more valuable. The underpinning of all of its security is ETH staking. And so, yeah, ultimately, I just don't see a world where, I think as Tom Lee put it, can you imagine a world where you try to explain that the US dollar does not benefit from all of these stock exchanges that exist here?
Right.
You know, oh, Google trades here and Nvidia trades here. And the argument being made, well, the US dollar doesn't benefit from this at all. And again, different, that's a medium of exchange versus more of a store of value that I think ETH is. And so I think it's silly. And
Yeah.
you have to get outside the crypto Twitter sphere to understand this.
Yes.
I love our community. I love being able to like see all that you guys are posting and sharing and you know, all of our other peers.
But that's not really what is moving.
That's not the only conversation out there. Like there's a lot of folks with enormous amounts of capital who they have very simple theses about this space. You know, they're like, hey, Bitcoin looks like it's working to me. It looks like digital gold. Oh, there's a quantum threat. Okay. I mean, like, is it like something that's going to bring down the network tomorrow? I'm worried about that, you know, like long term, but again, Wall Street is not looking at it with the same sort of skepticism that our community is. So
Actually, I have a question from Edward. He's a big ETH bull. He said, DeFiDad, when you say security is Ethereum's main selling point, ETH's main selling point, normies will point to Kelpdao, Exploit, Aave, and others and say there's still a lot of risk in DeFi. How can ETH bulls respond to this?
Okay, yeah, we've been talking a lot about this. I agree. It's been kind of a dark year for DeFi, and a lot of that has to do with the fact that there are exploits that are clearly happening because AI tools are being used to uncover vulnerabilities. I mean, this whole Zcash thing to me was really scary because
right?
they're an enormous network, and like I get worried, like what if this happens to other blockchains?
Any of them, right? Yeah.
So what I think we're missing is that things tend to normalize over time. What I expect is that all of the like dismal sentiment around what's the next exploit, and of course, like by the way, like what happened with like Kelpdao is, I believe it's a failure. In my opinion, it's a failure of layer zero architecture. There was a true hack there, but like Zcash being to me much scarier. I think we will eventually get to a place sooner than later where those same tools are going to ultimately shore up all of this security. Like we're going to ultimately be able to ensure that we don't have these sorts of exploits. Great example is Nomadic and I are very close with the Fluid team. We try to stay on top of everything they're working on because we are power users above all else. I am most concerned about the security of these protocols, because I'm storing, a lot of capital in these protocols. And so every time a new model comes out with Claude, they're running that model with, I believe like they're running some sort of agent and they're looking for vulnerabilities.
Yeah, just like honeypots across the entire DeFi landscape.
So this sort of thing I think is going to continue to play out. And, I have heard a rumor that the Ethereum Foundation got access to Mythos and has run that. I cannot verify it, because the source that told me it basically it was like one of those things like I'm telling you this, but like I can't tell you more. I know that I believe Solana also got access to this, or at least they either had like. They either were public about it, or again, it's something else that I had heard through the grapevine, through the rumor mill. And I have no doubt there's others out there. So, again, I know it's been dark this year. I've seen a lot of like, you're like leading these folks to be slaughtered by these exploits. And I'm like, I'll just, say that I am as invested as I've ever been in DeFi. There's lots of landmines. I think it's important that we really think about what has been stress tested over the years, but then again, don't assume that don't assume that something cannot be exploited. I think what happened with Aave, they didn't get exploited, but ultimately the markets were, taken advantage of because of a failing of
the risk
of layer zero and of Kelp and of Aave too. What am I saying? I don't
to Aave's risk management.
To their risk management. So anyways,
I had one of our true listeners, NOCSM, says, can we hit on the rumor of Zeller talking about launching a new Aave token? I don't know if you saw that tweet. So he put out a tweet.
Like a new protocol, or just like a whole new token for Aave?
There was a tweet that he tweeted that was like, somebody was like, Aave like could be a good value buy here or something, and then he was like, but in a different token.
So I truthfully don't know anything about this, but I know that we all know Mark was instrumental to Ave's success. And I know he's been very public about like the fact that he's like, okay, well, like clearly I've made some mistakes here. Like I think he has stated some like public regrets about like getting Kelp on board because in retrospect, duh.
Yeah, of course. But I think it's a new protocol, by the way.
That's it. Protocol, so I expect him to eventually launch a new protocol. Zero doubt. He's too valuable of a builder. And actually, this is another reason I love Ethereum is that it is the most radical capitalist experiment. Yeah. He will go out. He will. I would imagine that Mark has the sort of backing. He doesn't need to raise as much money as other founders. He's going to go out with his own killer team then, and I hope they launch a fierce competitor to Aave. I think it makes the whole ecosystem richer. And I think, honestly, Aave will probably, like maybe there's some, liquidity that leaves them and goes over to some new protocol if this all plays out. Yeah. But I'm not, by the way, I will hand on the Bible. I don't know if they're launching it for sure. I don't also know anything about it, but I'm a big fan of like all the work Mark's done over the years. So appreciate you, Mark. So.
Yeah. And I mean, he's been instrumental. He was like one of our first podcast guests. I think he was like our 4th ever podcast guest.
Yeah, he's something. He is again one of the best representations of someone who he always believed in what he was building, and like that to this day, like that's why not only is my largest investment in ETH, but like I remain loyal to Ethereum because I think it's still not only a pioneer in the space, but it is one of the best cults to be in. Bitcoin's a great cult. Ethereum's a great cult. Hyperliquid's a great new cult. Say whatever. I'm a .eth who's willing to say I have a lot of respect for what has been built over the long term through Solana. I disagree at times with certain design choices they've made, but I think the disagreements make our whole space richer and it's more enjoyable. You get to learn from each other. So
what's your take on the upcoming or the news of Tom Lee and Bitmine launching a preferred dividend product, a preferred shares offering 9.5%, I believe is the rate. Obviously, Ethereum, unlike Bitcoin, has that native staking ability to get 2%, 3%, depends kind of on the year, on the time, or on the issuance. We're trying to create an environment where Tom Lee and Joseph Shalom and Joe Lubin can kind of step into like this like institutional sales arm, if you will, almost. Let's start with the preferred equity launch. Do you think that's meaningful given what we've seen with Stretch right now and Saylor? How do you differ the two? How do you think this plays out?
Yeah. So if you dumb down Stretch, Stretch is Saylor's way of ultimately raising investor capital to buy more Bitcoin, and he's saying, "I'm going to pay you guys 11.5%. By the way, it's not guaranteed. I'm going to pay you that," but he doesn't have to.
Right.
And so ultimately investors will sell their Stretch at a discount if they lose confidence in him paying the dividend. The game that he's been playing is that there is no native yield to Bitcoin. So he has to ultimately buy low, sell high. And obviously like his track record is, he's, the ultimate diamond-handed Bitcoin bull. So he doesn't sell. He sold like 32 Bitcoin or something. Everybody lost their minds over it. So the main difference between Stretch then and what Tom Lee and Bitmine will offer is he doesn't have to sell ETH. He can fund the whole dividend just off of staking yield. And so this is again like I don't need Stretch and MicroStrategy ultimately to lose for Tom Lee and Bitmine to do well and be right here. Like I think it's brilliant. And like Tom Lee is, he's doing what he's supposed to do right now. He's accumulating as much
he just bought a bunch
ETH as
more.
he can. It's what you want to see. So that's anyways, main difference for me is it's a difficult balancing act. And I don't take for granted that things can go, wrong in either scenario here. But Tom Lee has that native yield. So they're printing money that they can use to pay it out.
And they're staking a ton of that ETH that they have.
Yes.
Like already like billions of dollars worth. I don't know the exact numbers, but it's a significant portion of their holdings they're staking.
Yes.
And so as long as the preferred product doesn't, get to a substantially large amount, you can just pay that yield just with the ETH staking rewards.
Yeah. Remember,
theoretically, right?
When someone starts to talk about like it's a preferred equity offering
Digital
with
credit.
variable, like they go through all these buzzwords and like most people glaze over. I'm like, these guys are literally they're borrowing money and they're saying, I will pay you 11.5% with Stretch. I will pay you, is it 9.5 with this new offering through Bitmine. All they're trying to do is buy low and accumulate that so that ultimately their balance sheet should grow over time. And then they should ultimately see their actual like market cap become like a multiple of that. We've seen MicroStrategy trade at, pretty unbelievable premiums.
Yeah, almost like 2 times.
It's just the opposite right now. Again,
it is.
This is a bear market. So
Yeah,
everyone's like, oh, it turns out, I've heard so many people say this recently, Saylor sunk the market.
Everyone's going to blame him, of course.
You got to be kidding me. We're going through the same thing we always go through. We look for someone to blame. It's like everything doesn't matter, but it also does matter. Of course, he has an impact on the market. But like, I'm convinced if there was no narrative around Saylor, we would be finding something else to kind of like connect the dots back to.
Yeah,
and
I agree.
Yeah, so I actually really liked is it Jan Lieberman, if I'm saying his name correctly, from Delphi. He had like a really nice sort of breakdown about like, hey, if it turns out Saylor sold more Bitcoin, that extends their runway. Because remember, he needs this like big pile of cash to pay the dividend for borrowing all of that money. And if he sold a bunch and the market was tanking, it's actually, his argument was it's a good thing because people are going to realize he now has 12 to 24 months of runway.
Right.
But if he didn't sell anything and they still have this like 6-month runway at current Bitcoin prices, again, this is all based on like the current price of Bitcoin, then just what if things get uglier and then what if investors start to lose confidence and Stretch? So like, I think the key takeaway on all of this is Bitcoin will be fine with or without Michael Saylor, but it has clearly benefited from his buying Bitcoin over the years. Immense amounts of buying pressure from him. Just like Tom Lee, if someone said, would Ethereum have recovered last year and had like the sort of end of bull cycle it did? I don't know. I'd like to think it probably was due for, a bounce. It was pretty bad in April 2025, but did he have an impact? Of course he did.
20
and
billion
is he
just
having an
straight to the
impact now?
market.
Absolutely. So,
So one of the things that Rob and I asked Joseph Shalom is about this kind of like ETH burn thesis. Is this thing still a part of the equation here? We're trying to get a lot of transaction activity on Ethereum, burn ETH, this kind of ultrasound money concept. And Edward here is asking a similar question that I think is like very apparent. In all of the L1 founder conversations that we've been having, the business model is transaction fees on the blockchain, generate fees, no matter if it's like Stellar Lumens and it's like a tenth of a penny, or Ethereum and it's like 50 cents or 10 cents, whatever it is. And those go to the token or buyback or a burn or something, right? It's like a very basic model. But at the same time, you have like interesting conflicting forces where one of them is a lot of these chains, including Ethereum, including Solana, including Near, including Stellar, they're all trying to decrease their transaction costs because block space is kind of a commodity. Everyone realizes this. They want a better experience, better, higher TPS, more scale. And also, in Ethereum's case, they're thinking about lowering the issuance. Near cut their issuance down by 50%. Solana's trying to do it as well. Everyone's trying to cut their issuance down. And so you kind of have these weird forces where the business model of these chains is like, we're going to scale the transaction fees and then we're going to burn the token or buy back the token. And of course, economies of scale here is how these things work out. But the question here is, and I think this is pretty apparent, do you have any thoughts on decreasing ETH staking rewards so ETH can return to ultrasound money? Total ETH staking is approaching about 40%, largely due to Bitminer. So the question here is like, Tom Lee's being an advocate for like, we want to decrease the issuance. We want to, or perhaps I'm not right on that. You know, there's been a lot of talk about it. What do you think about this? How like is decreasing the ETH issuance and staking?
I think I have a good simple answer on this. So there's two camps that I know of. One of the camps is there's a camp that I've heard say, if we decrease the issuance, we are ultimately going to lower that inflation of ETH. And again, maybe we get back to this ultrasound money narrative. I personally don't think it's necessary, but I understand some of this is coming, supposedly some of this is coming from Wall Street. There's like some sort of influence there. And again, it could be just bullshit and rumors, but okay, let's assume that that's true. Okay. So there's a camp that says, hey, can we just lower the inflation even more? There's another camp, this is probably the camp I'm in. I'm like, until more arguments are presented to me that like convince me otherwise, I believe that the ETH staking yield is like the native T-bill rate of Ethereum.
Right.
And when you think about like what makes the world go round, our whole economy really like ultimately is so reliant on these T-bill rates. Like, and so if someone said, hey, we're going to just cut it in half and this is going to make the American dollar that much stronger, you're like, listen, I can like rationalize and try to understand what you're saying there, but like, you're just like glossing over this, like we'll just make the change. So the thing I'm most sensitive about with this is that there's been a lot of criticism over the years, and this might just be like crypto Twitter criticism. Maybe this doesn't exist outside of our little bubble, but there was a criticism that, hey, we need Ethereum to basically like stop making changes. The truth was Ethereum was scaling the L1 and working to obviously enable a world where L2s can work even better on top of it. And so we've got this all playing out, and I think that the best thing that ever happened was Ethereum hitting its 10-year anniversary. I think it was like a wake-up call. Holy shit, this thing's never gone down over 10 years. It's resilient. By the way, what does that remind you of? All the arguments we make about Bitcoin being unchanging and predictable and just being simple to understand that this thing continuing to produce blocks is actually its greatest value. Ethereum being a much more like complex and nuanced machine that all of DeFi is built on top of, people sometimes lose sight of that and forget that, hey, the fact that it just keeps producing blocks and it has all this client diversity, and the fact that everyone builds on it with the understanding that they will continue to be able to predictably build on it. Like, this is its real value. So my fear, going back to the changing the staking issuance, is I don't want to give fodder to our most fierce critics. But believe me, if someone can make the argument, if the community can come to an agreement that this is ultimately going to benefit Ethereum's ability to continue to host the most vibrant DeFi ecosystem, continue to be the most secure L1, and continue to ultimately have that priced into the token over the long term. If that will all play out, then sure, I could get on board with it. But I'm in the camp of like, can we just please talk more about this and debate more? Have a like, I hope that someone like a Tom Lee, he could be a great person to translate this and like let us know, like, okay, well, like, what do the biggest capital allocators in the world who have exposure to ETH, what do they think about this? Because we need to know now, not just those of us who are like the long-term like weirdos who are in the space. So
I mean, it's interesting. I mean, people want capital gains and they want the income, right? It's the same thing with the T-bills.
I would hate to use that. I'm sorry. I would hate to lose that yield. I think that 2%, roughly a little over 2%, I think that it underpins the whole economy. And I think like, when I think about my own DeFi portfolio, I mean, just reminder, I was not in the ICO. I started looking at ETH when it was around $300, but I had no money to buy much more than a few ETH. And then I lived through that bear market trying to find ways to like scrape together whatever money I could to buy. But like I was, by the time I had really like, I would say like some savings. I went from like $50,000 of credit card debt at one point to being able to like, we bought our home. We saved money and we bought a home. And that's when I was like, okay, now I can really start to like focus on allocating more here and finding ways to store wealth over time in that. So I get it. I know, like, I understand when someone says, I feel like I was late to ETH. I'm like, join the club. I was too, you know, like it's fine. Like, it's like, I still believe like the market cap of Ethereum right now should be in the trillions based on just all the economic activity that it hosts. And the fact that if you destroyed the Ethereum network tomorrow, you take down something like conservatively 60% of all DeFi activity, probably more though, because of all of the dependencies on L1. You know, everyone ultimately, Ethereum L1 almost acts as a hub between all these chains. Whether Solana likes it or not, folks love to go in between these chains. And somebody did a map of all of that. And like, it's crazy to see like the volume that's flowing back to, you know, the L1. Again, even if you're a hyperliquid bull, you're hugely reliant on Ethereum.
EVM or Ethereum, $8. Just kind of closing out here, DeFiDad, great to have you. Just give us your ETH bull predictions here. What's your bull bear case for not even this year? It's too short term. Like, give us like, I think we're probably gonna, you know, we're in this closing period of the bear market here. I think it's pretty obvious. If you've been through, you know, what, 2 of these now, you kind of see these and you're like, okay, like we're getting to the end here. So, you know, not this year, but next year, what do you think is possible for ETH?
Okay, so as long as you are avoiding leverage and you're spot buying, like what I do over time, and as long as you have like a multi-year time horizon, I mean, there's no doubt this bear market could be over very soon. I'm not like, I don't care about making that public call and saying, hey, we just bottomed. Guys, that was the lowest RSI in history. I think it was the daily RSI for ETH. I could be, and I'm like, wow. That is remarkable. If you go back and you look at the daily RSI and you bought every time it went to basically like a local low over the course of a few years, holy cow, you'd be doing really well. So for me, it's a great time to be buying ETH. I think that the best thing that I'm seeing right now is I feel like there's a return to quality. It seems like whatever went on with the meme coin mania, like, it really like washed out a lot of folks. And I think maybe everyone's finally learning their lesson. I think also just really important to, you know, whether it's me or Arthur Hayes telling you that the price is going to go 20x for near and then he's selling it the next day. You have to, you know, own your own decisions. And that's part of the reason, like, I've missed so many great opportunities. Like like Nomadic has hilarious stories to tell about me saying, if hype just goes to that price, I'm going to really ape it this time. You know, it was down at $10 in April 2025 or like May. And I was already like invested in a way in the hyperliquid ecosystem. And I just kept thinking, okay, what else do I need this capital for? What if 2025 is the start of the bear market? And so for me, it wasn't the right time. Does that mean that I need to top blast it right now? No. And so I think, again, like, make sure I am from the school of thought that I always feel like tomorrow's another day. I don't have to buy today. I'm happy to buy something after it proves that it's back in an uptrend.
I agree.
So I will say, I think that, again, ETH has been playing a game of the fundamentals. We're catching up with the crazy parabolic moves it made. I mean, it is wild that Ether went up to almost $5,000 in 2021. I don't believe the price deserved to be there in retrospect, but I'm not going to like chant for the price to have gone down then. I think it's been so healthy for the fundamentals to catch up. And this, for me, this has been the most excited I've been in years to be able to actually buy ETH again. And that goes, by the way, that goes for, you know, another like OG, which is Bitcoin. You know, I'm as excited as ever to be able to buy it, but for totally different reasons.
Yep.
And so the founders that we are meeting with, whether it's through like an interview like this or whether it's like to invest, you know, and it could be like my own, like it's the audience that maybe I attract or the founders that we attract. But, you know, Ethereum is the one thing that's predictable for them in an unpredictable world of building startups.
Yep.
Everything else is a moving part that could absolutely blow up at a moment's notice. But when they build on Ethereum,
They know.
that at least is the thing that they know that isn't going to, you know, screw them in the end.
Yep.
So anyways, I think my next like major price target, like just going up, is everybody wants to see that $10,000 mark.
Yeah.
I think once we hit there, we're going to see a lot of folks talking about the price action of Bitcoin and what it did, because you can't unsee what it did, right?
Yeah.
So they're going to start to say, well, where can it go next? And, you know, I love Tom Lee's bull thesis. We did an,
250,000.
at the end of the day, I think there's, there's like 800 trillion in assets.
Yeah.
If we capture a small fraction of that, I think we're talking, you know, tens of trillions.
Yeah.
And at that point,
ETH would be $1.2 trillion market cap.
there you go. Yeah. So anyways, I would love to see ETH violently repriced though here. I think that, again, that RSI was just
insane.
the most bullish like thing to see. Depressing.
Yeah, it was.
Depressing to see it, but you know, harvest your tax losses if you can.
exactly.
Like that's one of the silver linings, and then just sit tight. And yeah, we've got, if there was ever a fundamental failing of the network itself, I would have already like abandoned this thesis. But the fact it continues to produce blocks like it does, it's the most valuable thing it can do. And just a reminder, we don't need, for everyone that's like building other ecosystems, you don't need Ethereum to ultimately lose in order for you to win.
No.
You know, like I think there's been a mistake in the past few years where new L1s were so fixated on eating into its market share, when I'm like, there's an enormous like world for us to grow into. We're still like, I think we're 2.5 trillion or something today. We can get to be so much bigger. I mean, I think it is, again, it's going to look silly looking back and realizing, holy cow, like I was in this space and it was a few trillion.
Yeah, exactly.
And now it's 100 trillion. What was I thinking?
Yeah.
So yeah.
DeFiDad, thank you for joining us.
Thanks
Thank
for
you
having
for
me.
the ETH bull. I think Robbie needed it. We all needed it.
Yeah.
I mean, that sell off, that RSI was insane, just to pull back. But the fundamentals keep growing. We're excited about it. I mean, we're called the Rollup. The show's name has kind of gone from like ETH LT.
You guys have been at the
media.
forefront of that. I appreciate it. You're very technical.
Huge fan.
Yeah.
Thanks, buddy.
Dude, thanks for having me.
Yeah,
Great
cheers,
to see
man.
you.
It was fun. Guys, we will be right back with our next guest, Sam Kazemian from Frax. Don't go anywhere. We'll be right back in just a second. Get him all set.
That's so funny. I was seeing.
Money, power, I'm big, 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 but I'm big. I'm right, big, 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 but I'm big. Money, power, I'm big, 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 but I'm big.
We get deep, deep, you know we get deep. Deep, you know we get deep. We get deep, deep, you know we get deep. We get deep. We get deep. We get deep. You know we get deep. We get deep. We get deep. We get deep hot. You know we get deep. We get deep hot. We get deep. You know we get deep. We get deep hot. We get deep. You know we get deep. We get deep hot. We get deep. You know we get deep. We get deep hot. We get deep. You know we get deep. We get deep hot. We get deep. You know we get deep. Deep, you know we get deep hot. We get deep. Deep, you know we get deep. Deep, you know we get deep hot. We get deep. Deep, you know we get deep. Deep, you know we get deep hot. We get deep. Deep, you know we get deep. We get deep. We get deep. We get deep hot. You know we get deep.
Welcome back to another episode of Stabled Up, our premier weekly show covering the ins and outs of digital dollars, stablecoins, and the future of decentralized finance.
The show is made possible by Frax, and Frax is powering the financial engine of the internet, powering FRX USD and Genius compliant stablecoins. This is the stablecoin super cycle made possible by Frax. Now enjoy Stabled Up, our weekly stablecoin show.
Alrighty, guys, welcome back to the Tokenization Tower. You're watching the Rollup. This is episode number 36 of Stabled Up, our weekly premier stablecoin show. None other than Sam in the tower. Good to have you, Sam. How's New York treating you?
Excellent, man. This is so cool. This is like, I feel like New York and SF are like the two pillars of tech, AI and crypto and finance. So this is awesome.
Yeah, man. It's all the ads in the subway are AI ads now. So the SF culture is infiltrated here for sure.
Yeah, I saw a bunch of crypto though. I saw some Ripple and other stuff. And,
Nice.
Yeah.
Well, one of the notable things, Sam, today and this week is action on the Genius Act. Kind of getting that into law. You know, we were just talking about prior to this going live, just about there's a couple more things. Could you just catch us up on what's happening there with the Genius Act? What is left to get this thing into law?
Yeah, I mean, I think legally speaking, it's technically law. It's just that the OCC and the federal agencies that have been tasked with actually giving guidance and the process to apply for like a Genius license, or I guess technically a payment stablecoin issuance, license, need to go through with all of the comments, rulemaking, final releases of the actual procedures and everything. And I think for short TLDR, I think by Q1 2027, I think it should be open for business, which obviously we're hoping with Frax, we'll have Frax USD be licensed Genius stablecoin. Now, one thing that I will say is that since it's on default acceptance, right, the way that it's going to work is that you apply, and unless there's a very specific response of no for a specific reason, I believe it's 120 days of auto default in compliance.
Okay.
And so I think that's what's going to be really great for innovation, because unless you're doing something extraordinarily wrong and you get a no, it's a default yes, whereas the FMA and Fed master account and all that stuff right? It's a default is no. So then the Fed used to always be able to just leave it for years, right? And just, say, well, we don't know how risky this new bank or whatever is. And that's just a political way of saying F you, right?
Yeah, exactly.
Right? So
get
this
outta
is the
here.
exact opposite of that, which
that's
is really
bullish.
great.
Yeah, that's great. Well, great. Just wanted a quick update there. Really today I wanted to just kind of have a Frax specific conversation about the business of Frax and kind of as we're in this very institutional era of this industry. I coined this term revenue meta a year and a half ago. It's a very silly term, got a lot of flack for it, but we're very firmly in this era of I'm an investor, I'm looking at Frax, I want to understand business model, revenues, token flows, emissions, net value flows, how these things are coming together, what the stablecoin business is doing, how it makes sense from like why Frax is an investable company, investable asset. With a token that is obviously separate from a stablecoin. So stablecoins are obviously one of the pillars of this era, right? Perps, tokenization, stablecoins, I think are like the big three. So you guys are in a really strong spot here. Just kind of, let's just get a high level of the Frax business model. How does Frax generate fees, generate cash flows? What is the business model of Frax as it is now? And then looking forward, let's start here high level and kind of just get into the weeds about what the investability of Frax is.
Yeah, for sure. So obviously the flagship product is FRX USD. It's a Genius compliant stablecoin, right? And we like to say Frax is a stablecoin operating system. It means it's a verticalized stablecoin stack, right, that we have. And one of the most interesting things actually brought up the Genius Act and also the Clarity Act is coming out, and maybe it'll pass and maybe it won't. I think there's a high chance it will. What we actually do with Frax USD is we get it integrated in the most DeFi important hubs, right? So Aave's new V4, actually the Frax USD is currently like the largest stablecoin there.
Yep.
We're working directly with them. There's a lot of curve pools. And so what we do is we actually stream the risk-free rate to these important DeFi hubs. And we make it so that this is the default digital dollar that's compliant, that is fully redeemable, that can be used as payments and is one-to-one, right? At all times, the entire supply can be redeemed in T+1, right? For cash if you want to, or one-to-one in other major stablecoins. And the idea here is like all of these places like Aave, if you lend Frax USD, you'll get streamed the risk-free yield as a baseline.
Yep.
Instead of other stablecoins. And it's not like a campaign that's like done in a month or something. It's actually a mechanism. And so we've built this out. And that's actually one thing that's very powerful for Frax when if the current wording of the Clarity Act actually passes, where only activity-based streaming of yield or rewards that are not interest rate for idle holdings, but interest rate or rewards for activity, right, is allowed clearly. This model is actually going to become the standardized model where you participate in DeFi, you participate in a payment system like a Frax card, an EtherFi card, or like a Visa payments card, right? These programmable cards, or you participate in these DeFi hubs, right? You create a curve pool where you're pegging to Frax USD instead of other stable coins, right? And when you LP it, you get streamed the underlying for the amount of Frax USD you hold in that pool, for example. And this is actually a really important composability tool because if you think about how to build a fiat coin in 2026, if you're going to build it from the ground up, it would work something like this, right? It would be aligned in all major places in DeFi, in hubs and spokes of where economic activity is happening. And then you would monetize it as it gets more monetary premium, which very few stablecoins have been able to do outside of Tether and Circle, obviously. Then those can be monetized, right? Like we don't share 100% of the actual yield on 100% of the supply. When people hold it, they use it as payments. We actually can capture that monetary premium. And then also we have other products around it, right? We have the Frax USD savings vault. You stake it in there, and then those strategies, you can kind of think of it like an official vault, right? Those go higher than obviously the baseline T-bill yield. It's always guaranteed as the T-bill yield for staking in there. But then we actually deploy it into important places like Aave, like Carry Trade, like RWA strategies. And so those always yield pretty much industry benchmarks, right? And so you have this full stack financial ecosystem. There's many places to capture value that is not commoditized, right? One of the things that we kind of talk about internally, both at Frax and I think a lot of places in crypto and tech are talking about is when AI commoditizes the actual software, right? What is actually durable in terms of revenue? Like, I think your revenue meta is right on the money, right? No pun intended. But there's a caveat to that, which is the revenue has to be durable, right? And so, like, one example is like that is the market potentially saying is not durable is if you look at Salesforce equity over the past year, they've actually beaten forecasts, right, on revenue, but the price has gone down. Why is the price gone down is that the market is essentially saying, we don't know if SaaS, the way that SaaS worked before, that Salesforce is dominant in, right, will exist in 5 years or 10 years. So we don't know, even though today your revenue is amazing, it's durable and all this stuff, we don't know if it'll be durable in 5 years. And so one thing that I think Frax is very, very good at is this monetary premium and this verticalized ecosystem that's growing, very similar to things like Tether, things that are sticky, that have a moat. You can't vibe code liquidity or integrations, right? And so that's why I think it's very valuable.
Okay, so thinking on that line of durability as it pertains to Frax's business lines, what does the expansion look like for Frax then? Markets are forward looking. You talk about durability of revenue, into this year, into next year. How do you think about Frax's financial state as it pertains to expanding the revenue? Thinking about things like token value accrual, et cetera. Talk to us about kind of like this, the bigger picture. Okay, we have these business lines, we have these products. How do you kind of round this out into making Frax the asset something that people are super, super bullish on buying, et cetera, because they see the business lines, they see the growth. Just talk to us a bit about like that forecast and how you're thinking about Frax the asset as well.
Yeah, for sure. And that's a good question, actually, because I think there's going to be a few tokens that are heavily investable. Obviously, Hyperliquid being one. I'm still bullish Zcash, but I think you guys probably have talked enough about the Zcash situation.
We've had a fun couple days there.
Yeah. And I think there will be a few really important DeFi tokens that are in this sticky moat that's durable, like Frax. I think Aave is another token. CRV, CVX, right? These have staying power. They're not going anywhere, right? I think one thing we've institutionalized and are going to formalize is that, as we were saying together too, starting Q3, we're going to have a token holder investor week, right? We're going to actually have financials that are pushed out. There's going to be, analysts, people that can actually see, and they can see exactly the breakdown, what the growth has been, what product lines the team and the entire organization is working on, what things are coming, rather than only being able to hear about them in these podcast episodes or these appearances. There's going to be a formalization of that, and I think it's interesting because it's either tokens becoming more like equity, or the other way to think about it is equity has become more like crypto because of how volatile stocks and all these other things are. So they've kind of met in the middle rather than one has gone to the other direction. So I think you'll see Frax as more like an asset that has fundamentals, quarterly, investor updates, formalized with the team, in sync with governance and all those things. And we're actually compiling all of those with data rooms and everything in the organization. And then we're going to publish it in a formal way in the next couple months in Q3. And I think the other thing is a lot of these tokens will have to start doing that. Hyperliquid, for example, obviously has tons of revenue. Its business is really easy to understand, but as it diversifies a little bit more in different fee structures, or even has different kinds of flagship products, right? They'll have to also formalize this kind of reporting too, right? And I think everything is going towards that direction. We also have some payment platforms and deals that we've signed that are actually really, really big, and we'll announce that during Q3, but those, for example, you can't see that on chain. You can't see the actual
off-chain revenues, basically.
Exactly, and those go to burning the Frax token. Some goes to reinvesting in the business, right? And so those schedules, the proposed burns and all these things, we're gonna make it very clear what those are, where the actual cash lies. Obviously, we're gonna hold it in Frax USD, etc.
Yeah. I got a question here from someone watching. What is the advantage of FRX USD stablecoin versus Sky or Athena? Just generally, how do you think about this growing kind of market of stablecoins in that, separate from Tether and Circle, Sky, Athena, Frax, kind of like this trifecta of the three outside of those two? How do you think about the landscape there?
Yeah, well, I think there's a big difference between Frax USD and USDE or USDS, right? The closer thing is the savings vault that we're talking about, SFRX USD, which is yield bearing and has risk on the balance sheet. Will deploy the underlying. I'm actually a pretty big proponent of, there's just two types of stable coins essentially. Yep. There are stable coins that are essentially digital dollars that are redeemable, that will be widely accepted. There's going to be, a few of them as money. Obviously Tether, Circle, hopefully Frax USD. There's others like Agora, PYUSD, and USDG and things like that. Those are different. Those are very different. Even though Frax USD is built with DeFi first principles, economically risk-free in terms of it's just T-bills, Genius compliant assets. Yep. USDE is not like that, right? USDS is not like that. Yep. For taking the actual balance sheet risk, right? Whatever it is, right? They're all blue chip, very competent teams, but you should at least want the yield underlying, right? Yep. And so there's a very big difference. In fact, we know this from those off-chain payment deals that I was talking about. One of the things is a lot of these publicly traded companies want to actually hold stablecoins on their treasury for payouts, not just accepting pay-ins. And obviously, the first thing they want to make sure is the stablecoin they hold on their treasury, on their balance sheet for payouts, is it Genius compliant? Is it essentially risk-free minus like smart contracts or something, right? Is it economically risk-free? I don't think that, I know for a fact from talking to them and their management that they just want to hold digital dollars, right? The savings products are totally different. They might allocate some to, yield-bearing stable coins or our savings vault or Athena or Sky, very different. And in fact, I think the teams that operate in the yield-bearing area, very different GTM than the teams that actually have the underlying like M1 money essentially.
That actually brings me exactly where I wanted you to go, which is how do you think about, so stable coins are at a couple $100 billion right now, 300-ish, a little over that, 320 maybe. We're going a couple trillion, but there's different GTMs, right? There's different types of like that growth will be in different areas. How does Frax capture a significant part of that growth the next 3 years? Like you're right in the sweet spot here, right? Like you've got the tides of the game that you're playing, if you will, are on your side. How do you maximize the growth of FRX USD specifically with your GTM? What does that look like? Give us a bit of an insight into behind the scenes, how you're thinking about and what you're doing to scale the outstanding supply of FRX USD and really just permeate it to help your, just the broad Frax business pie grow.
Yeah, for sure. I think the way that we think about it is there's a new generation of assets coming on chain and a new generation of protocols, either new versions like Aave v4, which we're currently the biggest stablecoin on. We have over 20 curve pools that are pegging to Frax USD with their new, any project that's like a new yield-bearing stablecoin or synthetic dollar or RWA, things like Roico and things like Metal USD and MS USD, and there's a lot. There's a big list, and our idea here is that these assets are going to be the big assets of tomorrow. RWAs, equities, even, right? Stocks. We want to make sure that we're at the forefront of that and first mover in terms of liquidity, in terms of rates, in terms of pairs and partnerships. We're not going to do the things that people did yesterday, right? We're not going to go to a centralized exchange and be like, oh, please add like a BTC FRX USD pair. Tether's doing a great job with that. They've done that. They're crushing it, right? They're fantastic, and they've actually captured that market, especially when it needed to be done, right? And so we want to work with anyone that wants to create liquidity, right? That wants to actually make new pairs, that wants to launch lending pools, that wants to have a more efficient digital dollar that's issued in the US. And so in 2 years, 3 years, like you said, if you close your eyes and you think, okay, what does success look like for Frax and Frax USD and thus the token, it would be hundreds, over 100 or something of curve pools or AMMs, like we work with Aerodrome as well. And we're starting to work with Uniswap and Uniswap X with intent liquidity and all these places. We're just talking to the 1inch team earlier today as well. All of these places have deep Frax USD liquidity for assets that are new. So for example, for yield-bearing stablecoins, RWAs that are under 18 months old, their predominant liquidity would be against Frax USD. That doesn't mean they can't have other liquidity, right? But the way that WETH, WBTC, all of these things, their predominant liquidity is against USDC, right? Those assets, totally fine. USDC, all great, right? The new ones should be FRX USD, right? And then same thing with payments, right? These payment platforms and companies that want pay-ins and payouts, the ones already using them and currently are in crypto, use USDC. That's totally fine. That's all good. But the new ones that we're talking to, they are starting from scratch, right? We can give them a better, more efficient, fully integrated product, fully integrated platform. So in like 3 years, if you look around, it should be billions in Frax USD with the same definition of sticky liquidity, lending, right? Like Aave V4 in 2 years, hopefully is like twice as big or 3 times as big as Aave V3, right? Hopefully has 90 billion, 100 billion supply. Hopefully half of the stable coins in there are Frax USD. Right now, literally half is Frax USD, but it's tiny because it just launched, right? So you could kind of see where we're going with all of these things. And so as we also roll out our other DeFi products, things like that, we want to make sure that going forward from here, we're seeing all of those dominant KPIs, which we are currently.
And so one of the things that I think people would like to understand a bit more about is, in for example, in the Sky model, as the outstanding supply of something like a USDS grows, they generate more revenue, and then they can do more buybacks. They have this yield product, right? They can create, basically the business is like grow the stablecoin supply. With FRX USD growing, how does that lead to a stronger business and healthier business for Frax? What does that exact correlation look like?
Yeah, so for example, if there's billions and billions in supply, let's say just for simplicity, half of it, the risk-free rate is being streamed in these DeFi hubs, right? The other half obviously is gravy, right? It's the revenue goes into the organization, pays the costs, licenses, etc., salaries, and then the rest goes to burning Frax tokens. And then the other things like the savings vault, right? If it's everywhere, right, and being used, people will probably save using the Frax savings vault. Same idea as Sky. There's a spread, right? Like if it pays out 6% in the SFrax USD savings vault, but the actual earnings is like 6.5, 7, right? There's that spread that goes entirely into the actual DAO, right? And that gets to Frax tokens and it gets burned. There's also other protocols and products that we're revamping, like FraxLend, with curation features, and we're talking with a lot of other partners in this area, and so that speaks for itself. Lending Frax USD, earning the floor, but then also creating this debt and creating high TVL, right? Then being able to capture that through FraxLend, etc., goes to the DAO, goes to burning Frax tokens. This multi-model where a lot of economic activity is captured throughout the financial stack, right? It's not just going back to that commodity software durability example. We don't just sell software, right? So like we don't just like sell accounting software or like crypto software where if you just automate this part out or use something else, we're Frax is screwed, right? We are part of the entire monetary stack where one part of our product growing makes the other part better, makes the other part more useful. And so that I think is the ultimate staying power, right? So like we already see revenue coming in that regardless of the current token price across everything, both Frax tokens, but all these other tokens at all-time lows, right? We're not dependent on the token price, right? This is a real economic business. And so that's really valuable.
And just curious on there's this concept of like pre-commitments to the token holders or to the like there's a programmatic function here. Is that the case with the FRX USD Vault revenue, that spread, the stablecoin spread revenue? Is there a you mentioned salaries, licensing fees, expenses, and then the rest goes to this kind of like Frax burn. Is this like a programmatic happening that is on a monthly basis, bi-weekly, daily, quarterly? How are you thinking about like the rigid or flexible structure of the financial aspect of bringing revenue back into the protocol?
Yeah, right now it's not programmatically like on chain with like Frax USD revenue or other kinds of revenue like Fraxlend and things like that. It's just accumulated. There's two things. I actually think either quarterly with the reports, right, and actually saying the exact target of burns, or during those quarterly reports saying at certain prices we will buy to put essentially a more active, less kind of, I guess, gameable like kind of floor to them. I forget who was it, EtherFi, or was it was someone that was like we will buy it at these prices. I need to check it out. I need to ask DCF God who it was. But that I think is a really great idea.
More than just kind of like
back in the day it was called Merlin candles with MIM, for anyone that like they had a single block every day that they would use the like MIM profit, and it would just, the token would shoot up and then it would shoot back down. And I think it makes a really good spectacle, but I'm not sure if it's like the best use of revenue.
And on that note, like when you think about accruing revenue and the revenue that Frax generates into the protocol, into the business, there's kind of like this like dichotomy of opinions of people saying that people should invest revenue back into the team, the growth, R&D, scaling, etc. Then you've got people over here like, no, just buy back the tokens, pump my bags. There's kind of like a divergent view here. How do you personally think about this at the current state where Frax is at? Do you believe that what your the current structure is the ideal and adequate structure? How do you think about that going forward as you guys grow as well?
I think it's a really unique question per each organization, right? I think we're almost there, maybe like 1 or 2 quarters more of like reinvesting into the business entirely until parts or a large amount of the revenue can be used for buyback and burns. But there's also the other aspect of it. One is right now, I think a lot of like tokens are, and obviously not financial advice, but are at like all-time lows or something, where like I saw a tweet that was like the Aave token is like at the ICO price that it was.
There's sales everywhere. It's yard
like,
sales out there right now.
Same with like like almost every DeFi token, right? And so it's like, that's kind of funny. If it's at the ICO price when it was like 0 TVL, but now the TVL is like 15 billion or something, and it's clearly like the dominant lending. Same thing goes with like Frax. Like everyone knows what we're doing, and the company is sustainable and sufficient, right? But it doesn't really matter. I think right now actually is ideally a good time for the organization to buy back and burn the tokens.
The lows.
But then like reinvest it depending on what is going on down the line. So actually, like counterintuitively, maybe these 2 quarters are the right time to buy back and burn, and then maybe reinvest it actually in 3-4 quarters when the price is actually a reasonable speculative market cap that we reinvest into the business.
And I don't mean to make this so much about buybacks, because I think it's kind of like it's a tricky one in terms of, and it's been kind of talked a lot about. But do you think like do you want to just buy back and burn, or why not just buy back and hold the asset on your balance sheet? Why burn it?
Yeah, I mean, economically they're the same, right?
But you still retain the value.
Yeah, I mean, you could then use it again, like assuming like it's like a commodity token, right? That you can't mint again, so you could put it back into circulation later. I think it's a good idea. Economically, they're the same.
Yeah, they are.
But one thing is that I think when you buy back a token and then you burn it, you actually have an easier way to show that the supply goes down over time. And a lot of these tokens, unlike Bitcoin or Ethereum, like they can they can be minted through governance or like a contract upgrade or something, right?
Yeah.
Frax is a little bit more difficult because now it's the gas token on our chain.
Yep.
So we depending on governance, we buy back and hold, right?
Yeah.
But a lot of the governance tokens you could just mint with an MSIG.
Yeah. So we're in like this institutional era, right? And just kind of zooming out from Frax a bit as we come to a bit of a wrap, there's just quite a change of pace of how things are happening, right? Like the players that are coming in the space, they're just moving a lot slower than I think what we're used to. Larger balance sheets, larger investments, longer time horizons, less risk tolerance, right? When you think about Frax's unique position in this point, how valuable is the Lindy of, no exploits, of very few like depeggings, if any, reliability, genius compliance, or compatibility? How unique or how much edge and kind of like value prop do you believe that Frax, how you guys have built your company, lends itself into this next era? Do you believe that you're uniquely positioned because of this? I'm kind of giving you a layup here, but just like that, like very resilient, unsexy, we do things well, we do them right, it works in this era. How do you think about that for your company, your positioning, your brand?
Yeah, I think when we started with the new asset issuance like FRX USD and all this stuff, the most valuable asset we had is the brand and Lindy, right? Everyone knows that we do really good job, secure job. We are here to stay. We're long-term oriented team. Everyone in DeFi knows us and on-chain. One thing I will say actually is that we've been very impressed that a lot of the pay-ins and payouts and these public company and Web2 company deals that we've signed that we'll announce soon is like they've already heard of Frax and they have a good opinion of them of us, and so that actually does help really get our foot in the door than if it was just like totally something that no one's heard of or like just this new startup.
Yeah.
I think on the time horizon stuff that you mentioned too, my contrarian take is that there's going to be like a step function growth in like stable coins, and what I mean by that is like it's stablecoin supply has been between like 100 billion and 200 billion since like DeFi summer, right?
Yeah.
Like if you think of it, it's gone like this, and then it's like just
it's like plateauing a bit. Yeah.
I think that it will keep going like this until in like a 6-month period the supply will double.
Just vertical.
It'll just go to like 600, 700 billion.
Yeah.
And then it'll like stay there for I don't know however long, but it'll go between like 600 billion and like 750 billion or something. And what we're building at Frax is making sure that we benefit one of the most in that step function. Because the way that it'll happen, right, is like banks, for example, move like 10% of their deposits into
like
out
that,
of nowhere,
right?
like 15 billion minted, right?
Yeah.
Or like a public company that everyone's probably heard of, right? They'll be like, now we have a stablecoin treasury as part of our corporate account balance sheet that we'll do payouts in. Oh, cool. How much are you minted? 5 billion, right? 5 billion minted will basically be a top 5 stablecoin, right? When whoever signs that deal, right? Yeah. So I think that's what's going to happen. We might be 6 to 8 months away from that phase, right?
Yeah.
But I don't think it's going to be this really like, smooth line or like linear line.
No.
I think it'll be like a step function. And we're building for that day where that step function is going on.
Yeah. Well, Sam, I hope you have a great rest of your week in New York. I know it's going to be slammed for you and super hectic. I appreciate you spending some time with us. Ladies and gentlemen, this has been Stabled Up, episode number 36 from the Tokenization Tower. Sam, great to have you, buddy. Great to see you again. Guys, we'll be right back. Continue the show on. I've got a bunch of things that I want to cover with you guys before we end today's show. Stay right here. I'll be right back by myself. Rob's busy, but I'm going to close this out. So see you guys in just a second. Yo. What's going on, guys? All right, so Knicks in 4? 80% chance, huh? I think that's pretty bullish. Guys, what did you think of Frax, DeFiDad? Let me know in the chat what you guys thought. Try to talk to Sam about just like getting him, or like just understanding the token philosophy, the design, how they're thinking about the whole operation. And then DeFiDad is just a long time ETH bull, so you mean you gotta love that one. Wow, they have up or down 5 minute. Wow, this is degenerate, dude. That's crazy. All right, what do we got here, guys? 83% chance. These are also short term. Will base launch a token by 2026, December 33rd, end of the year. Damn, interesting. Clarity Act is sitting at 52% chance. Whoa, okay. Not bad, not bad. Could be better for sure. Could be better for sure. Could be better. What's going on in the markets? Looks like Near, Hype, Zcash all got a nice bounce. Zcash especially. Cool. Bitcoin is holding up a bit. We'll see how long she can hold for. Man, I just keep coming back to this page, guys. Like, fees definitely pulled back a little bit from the highs. First time I've seen a red TWAP in a while. So it is ETHConf week here, guys. So this week, we have a whole slew of people in person. We have different guests from various areas. Tomorrow we've got Jake from Coin Fund. We've got Peter from Relay. We got the Chainlink folks, and we got Keone. We got David Shamus, the Rain team. So pretty busy day and week. It's June 8th. Hype looks good. Market's bouncing. It seems like that war thing that happened over the weekend has kind of been resolved, at least in some sense. Per is just not pushing like it should, man. It's only up 2.8% given hype's bullishness. It's not great. We're gonna have Shamus on this week, guys. So I know you guys are probably bullish on Per after watching our previous shows with David. Should be good. Should be good. I'm gonna pop over to the timeline and just see what's going on here. This is pretty cool. Canton is just literally like a 16-cent stablecoin. Like if you look at it, it's literally just been sideways this entire time. Very, very, very sideways. So I haven't really been paying attention to the feed at all. So intern betting his career on robotics, super bullish. How money changed me. It's probably a crazy read. Dude, there are so many cops outside, just right outside. Like, it's insane. So many cops for the Knicks game. Hope you guys are betting on the Knicks. Why the Bitcoin bottom is not in SpaceX. Space isn't a great business model in the first glance. This is a good tweet. Guys, are we bullish on hype here? Are we gonna get some movement back up to the upside, to the high in the 60s, or is that it? What do you guys think? This is what you want to see, guys. I mean, across all of the dexes, across everything, you just want to see this number keep going up. Not even just for Hyperliquid if you're a bull, just if you care about DeFi in general. You just want to see this number go up consistently. Like, that is all that matters. Like, if you're just bullish for any reason at all, this is what matters. This number going higher. And Bybit took a bit of a bounce, but yeah, it's like 13.5% against Binance, 43% against for Bybit, 28 on OKX, 5.8% of the global share. You want to see that go up consistently. As far as volume breakdown and derivatives, I mean, like, again, you want to see this in the top. You want to see this flip. I mean, that's what you're betting on. Like, if you're betting on Hyperliquid, if you're betting on perps, if you're betting on lighter, on any of these things, you're betting on that flip. That's your take. Hype is going to flip Solana. It only takes about 2.3x to do that. Yeah, I agree. Great content. Thank you, Shine. Yeah, I agree. It's going to flip Solana. I don't know if it's going to do it that fast, but I think it has a strong chance of doing so. Yeah. Man, we're kind of getting a nice little look on BTC here as well. It's at least holding up. Hype too. So good day for the coins there in that sense. Yeah, I don't know. Rob bought more Venice today on the show. Let's bet 200 USD. Me and you, Indy. I'll send you an address, vice versa. All in fun. Spurs tonight. It's do or die for them. Guards were slow first two games. Oh, dude. Oh, come on. Come on. Come on. Oh, man. You really want to do that, man? I just feel like you're probably right. That's the problem. Like, I feel like if the Spurs don't win tonight, it's over for them. So I don't know. I'm not a big betting guy, but I think I have some stuff on Kalshi. I'm gonna do a little Kalshi. I'm gonna see what the odds are. Let me tell you what Kalshi's telling me here. So Kalshi has the Knicks as the favorite, but pulling back. I agree, though. The Spurs need to win tonight. If they don't, if they go down 3-0, it's so beyond over. Honestly, if there was a game that they were going to win, it's probably going to be this one. So I'm with you on that. I'm going to pass on the betting opportunity. Thank you, though. But I hope our lovely Knicks pull it off. I think I just got added to a group chat called Wemby Time. It's not the right name. I'll send you 200 USD. I trust you. No, I'm not going to do it. I'm not going to do it. I think you're going to win. Let's see here. Yeah, you want to see this come back up as well, and this to get back on the full bull thesis. You want to see this come back up. Did you guys see the Coinbase news today? We didn't cover that, but they are now actively deploying the USD Treasury wallet, and this should bring about $150 million a year in revenue to Hyperliquid on top of what currently is going on. Wemby, yeah. So this is, we were kind of waiting for this. Like part of the thesis was like, when is this money going to flow in? So I assume that it's going to start and that'll be added to the assistance fund for buybacks every single day. And I assume that means that it's going to start like now, as of today. So that's bullish. You know, I would have a hard time seeing this thing pull back under that $50 level where this news came out. But again, you want to see this go higher. Like you don't want us to top at $3 billion. You want OI of non-crypto pairs to get to at least $5 to $10 billion for this thing to be able to really kind of like truly separate. So that's what I'm looking for there. Wow. Guys, we're going to have Robbie back in the studio. Not tomorrow, but Wednesday, Thursday, Friday. Rob's going to be in the studio. It'll be a lot of fun. You know where to find us. We start a little bit late today, but guys, we're going to be live again 12:30 p.m. Eastern tomorrow. I am going to be tracking what this Coinbase news / buybacks are going to look like in the assistance fund. We haven't seen actual public commentary on that yet, but I would assume that if this thing keeps kind of turning back upwards, then we will see more commentary on that side. But for now, we're not seeing much. I expect that to come though. Guys, you're watching the Rollup. It has been a pleasure. It is June 8th. You know where to find us tomorrow, 12:30 p.m. Eastern time, here, nowhere else in the Empire State Building in New York City. It's been an amazing show. To all you guys in the chat on YouTube, thank you. Throw us a like, turn your notifications on, subscribe. You're watching the Rollup live from the Tokenization Tower, the Nest, the financial capital of the world every day. We'll be back tomorrow at 12:30 Eastern, guys. Thanks for rocking with us. I see you in the chat. Can I get a W in the chat, guys? W. Let's get some W's for the Knicks. Come on. Let's get some W's for the Knicks in the chat, all right? Let's get some W's in the chat from the YouTube side. Everyone watching, NOCSM, Shine, New Type was not here today. Edward, King's Clips, everyone else, W's in the chat. Thank you guys for being here. Thanks for being a part of the show. We will see you guys in the studio tomorrow after the Knicks win. W's for Knicks. See you guys then. Peace.